There's a world out there, it's a digital maze where dollars move in mysterious ways. Complex systems, rules, and regulations. The payments professor sparks revelations. No need to fear the Fed now.
Hey everybody, Payments Professor here, and welcome to the Payments Podium. Today, we're going to have some fun. We're going to talk about something that seems a little unstable, and that's stable coins. And there's a lot happening in the world of stable coins, and to help us get a better understanding, I have Adrian Wall with us. Adrian, would you please say hi to everybody?
Hey everybody! By the way, that was the best intro for stablecoin. No one has ever said an unstable stablecoin. I love it. We're off to the races.
Wait, that can't be the first time.
To set the stage.
Well, to set the stage, I got to tell you, I normally ask people how in the world did they get involved in the world of electronic payments just to get things started. But for you, it's a little bit different. And it really is, who are you, what do you do, and how'd you get involved with stablecoin?
All right, perfect. Well, I know our time is limited, so I'll try to keep it on the narrow. So, interestingly enough, well, let me start with this. So, my name, Adrian Wall, the managing director of Digital Sovereignty Alliance. We are a nonprofit focused on education and advocacy in the Web3 crypto space. Very recently, a lot of that energy and focus, particularly on Capitol Hill, has been on stablecoin. Right, stablecoin is the kind of jumping off point for all the rest of crypto, and for good reason, because the adoption cases for stablecoin seem to be, I would say, there's just more of them for the typical U.S. citizen. Cryptocurrency is more. We could talk about that some other time, but that's going to be a whole nother thing as far as trading stocks and things like that. So there's a whole nother bag about that, but I got into this one because I'm an educator. I'm a Harvard grad economics professor, Harvard grad economist, just about my bachelor's.
I didn't know that about you. I knew you were a smart dude, but I didn't realize you were a Harvard grad.
Yeah. So, I mean, there's a little bit of, depends who you ask if that's a good thing or a bad thing. But, I really enjoyed my time there, obviously surrounded by some of the smartest people, doing cutting edge research. And in economics, it's no different. We don't think of it as a traditional STEM, but my background was in TradFi, traditional finance. But as an academic, I always had my eye on cryptocurrency and digital assets because I was thinking about them as sort of the next level, the future of economics. People who study economics, and if you're a currency specialist, and if you're studying money, this is particularly interesting to you, right? Because we are redefining what a currency can be and how assets are backed and how they're valued. So with stablecoin, I've always had my eye on it while I was doing my regular day job. Now I've had a lot of success in my business, and I've had the good fortune of being able to move back to the U.S. with my family. I was working abroad for many years, and I had the opportunity to put myself full time into this field. So I'm now here based in Washington, D.C., where nothing interesting ever happens, right? I mean, this is like the center of
They
nothing.
talk about things happening all the time.
Right, exactly. No, I mean, jokes aside, it's been incredibly exciting to be here, and this is the right time to be on the kind of at the forefront of digital assets.
Well, it's funny you mentioned time. I heard Capitol Hill in there. Here we are talking about stablecoin. Do you know about the latest with the Genius Act, right?
Yeah. Oh yeah.
What? So from what I know is they pushed it through. They said we're going to vote on this real quick. We're going to make this happen, and it didn't make it.
Yeah.
Okay. So here's the big question I'm getting a lot, and I want to hear what your answer is. Does that mean it's dead? We're never going to hear about the Genius Act again?
No, and I don't claim to be an expert when it comes to actual battles on the Hill and how they do things in the Senate. But if you watched that on C-SPAN 2, and I'm sure you were on the edge of your seat watching every second of it on C-SPAN 2, you would have noticed that I think Senator Thune, at the very, very end, voted against his own bill. And that allows him to be able to bring it back again in the future. And it's definitely coming back. Nobody understands, myself included, why the Republicans put it out there. I really don't get it. There are Democrats, and by the way, I'm going to keep this very bipartisan. I'm definitely
with you 100%.
Yeah, I'm not espousing one or the other party. In this case, I represent people who are interested to see, ethical and responsible regulation pass. And that's on both sides of the aisle. And the interesting thing is the Democrats are, a lot of them are ready to pass this. They want to see proper regulation for stablecoins. And it's the same on the Republican side. So that's why it was such a mystery that it was almost sort of kind of forced down there. It was kind of forced to put this to a vote. I can share. I was actually I was in the Senate the day before. I won't say who I was with, but I was with a senator and his staffers. I'll put it this way: he was one of the 9 that was in the news for being a holdout. That if this was going to pass, they needed to get one of these 9 to agree. And he really wants to vote for it. He absolutely does. And that was the best part. I heard it straight from him that he is supportive of it. If we can get some of the legislation language to be clearer. And so we went back, our nonprofit, myself included, spent a lot of time on Wednesday evening, before he knew that there was going to be a vote on Thursday. It was supposed to be next Tuesday, or tomorrow in this case, at the time of filming this. So we went back and we were writing legislative language and report language to make some kind of recommendations to how they could improve the Genius Act as it was currently written. And we were really focusing on making sure that the consumer protections were a bit more robust because there was some vague language there. We wanted to make sure that, interestingly, that there were not some retailers that were going to take advantage of this to issue their own stable coins. Now, I thought the chances of this happening were pretty low, but picture Amazon or Home Depot.
Or Facebook.
And I'm not sure about Facebook may end up being able to do it.
They actually announced today that they're coming out with one even. I'm like, oh my gosh.
Yeah. But, so we were trying, one of the things this senator wanted us to do was to add language to make it prohibit, at least at the time of the Genius Act, which is about payment stablecoins. And I can tell you what that means later because they distinguish payment and non-payment stablecoins. But to make sure that Amazon or Home Depot aren't issuing their own stablecoins and using them as ways to kind of hook customers and kind of the way we do with credit cards nowadays, right? So financial institutions sort of hold that, they kind of play with that game. So we added language to that.
Into a digital wallet in many ways that you can only do from here. And of course, there'll be incentives and things, but it can be a trap.
Right. Exactly right. And it's too early. We need to just get this across the finish line in a way that allows for people to get comfortable with the technology, people to get comfortable with stable coins as an asset class and as a form of electronic remittance. We can talk about all the bells and whistles after the fact, and there'll be plenty of time for that. So at any rate, long story short, we did a bunch of work without knowing that it was going to be on Thursday. I wake up Thursday morning, I got other things to do. And then I got a message from this senator's office saying, hey, we are going to the floor at, I think it was 12:45 or 1:45, saying, 1:45. We are going at 1:45 and we are hearing that they're going to put this to a vote. Maybe not, we'll see. But the cool thing is, I was so excited. I didn't want it to happen, but never have I been so interested in C-SPAN. Never in my whole life.
I'm with you. I started to get Google alerts and I'm like, wait, what?
Yeah. And so like it was, I watched it. And even as I was watching it, I was like, my wife was telling my wife, no, I don't think they're just talking. They're just talking. And then they put it forward. I was like, oh, they're really doing it. And it's 64. You have for it to pass, they have to get 60 votes.
Yes.
So I'm actually there looking. I'm like watching yay, nay, and I'm watching. And when they crossed 40 no's, I was like, yeah, all right, we live to fight another day. And that's just because if they had passed it, I think in the end, it would have done more harm than good. I mean, a small part of me would have celebrated if they had gotten it across, but it still has to go back to the House, right? Or the House, the other side, before it can become law. And the House did pass their FIT 21 last year. And that's a market structure bill, not necessarily about stablecoins specifically, kind of about the whole ecosystem. And that's still sitting in the Senate. It was passed last May. It was passed over a year ago, and it still hasn't made much progress. So, just because it passes one doesn't mean it's there yet.
That's true. That's true. And what I've told a lot of people is, even though, okay, it may have appeared to initially failed, this is not uncommon. This is what I've heard referred to as the sausage making process, as
Yeah.
that's where they go through and they're really going to say, hey, here's the pieces we like, the pieces we don't like, massage it a little bit, enhance it, and make it what I would agree with you, a better product that should go through. And I do hope to see it go through. And I'm like you. I really hardly ever pay attention to what Congress is doing, but in this case, I'm heavily involved because they've never been this close to or involved with payments before.
Yeah.
Now here's the thing: what happens when it passes is going to be the big question.
I
Oh,
love it
thank
because
you.
this is how you and I met, and I'll be honest with your audience. So I had never been to a payments conference before this year in my life, or else you and I would have met a lot sooner and formed a fast friendship a lot quicker.
Yeah, yeah.
But my prior career, it didn't bring me into this world, but it's a fascinating and an incredible world because we all use electronic payments. We all do without even thinking about it, right? So what brought me into this was my work in stablecoin, and it was brought up that payment professionals and people who look at risk for a living and compliance for a living need to know what stablecoins are and what their adoption use cases could be in the future. Particularly because what everybody is thinking about, people who know just kind of the basics of stablecoin, they know that it can be used for overseas remittances, right?
Mm-hmm.
So outbound remittance, outbound payments, very similar to how electronic payments are done today, minus the financial institution guardrails specifically. ACH payments have to be done through financial institutions. Stablecoins do involve FIs, to be clear. Stablecoins, we're talking about the US dollar fiat currency backed
Well, I
stablecoins.
was going to say maybe we give a really good definition of a stable coin because I
Sure.
know a lot of people are following like what's happening with the Genius Act. A lot of people go and watch the videos on the YouTube channel and come back with questions. And I think the most important thing is let's just make sure this is how we are addressing and discussing what a stable coin is.
Okay, perfect. It's a great idea. So stable coins are, for the purposes of today's conversation, they are US dollar fiat currency or equivalent backed digital assets. So in most cases, for example, one USDT, right? Tether, one USDC, Circle. These are the two big players currently. They are backed by, so one coin would be one US dollar. So that is what keeps it stable. So stable coins were invented, I believe, don't quote me on this. I believe they were invented back in the 70s, but maybe it wasn't that far back. Maybe it was the 90s. But I do know why they were invented. They were invented because people who were speculating and trading in cryptocurrencies needed to be able to hold their dollars in something stable. They couldn't just leave it in the crypto because it was just too volatile, right? So stable coins were invented as a way for people to hold their assets in digital currency, and that will allow them to be able to trade crypto and not have to worry about the values jumping around.
And can we point out a couple things? Though a stable coin is equal to a dollar, it doesn't replace that dollar. It's
Correct.
just backed and equal to that dollar. And also, people say, is it a cryptocurrency? Yes, but not all cryptocurrencies are alike. A stable coin is a type of cryptocurrency. There's still several different other types that are out there.
Precisely right. Precisely right. And even within stable coins, US dollar backed stable coins is only one type. There are gold backed, silver backed. There are what they call algorithmic stable coins, and those are, the value is determined based on an algorithm, as the name states. But that those have proven not to be as reliable. The U.S. dollar is the one that's most widely used today. I could say, I checked this morning, if I'm not mistaken, Tether is doing about 116 billion a day in active use, active transactions. Circle is doing around 11 billion. So there's a big difference, right? Circle is the one that
That's
is a
B,
US
billions
billion
of transactions a day.
correct. Yeah. So, in the world of payments, these are not small numbers. They're not the biggest in the world, but they're worth taking note of. And so that's why I've started making appearances at payments conferences with you, and started doing a little bit of public speaking, primarily just to educate and just to say, look, this is a safe space. I always start off by saying, hey, raise your hand if you know what a stable coin is. And I'm very happy when almost nobody raises their hand, right? Because I mean, one, people are being honest. and two, that means I'm in the right place, because then I can walk people through like what we just did. Start with, what is it? What are they? How are they used? What are they
All
in?
right, wait. You went there. We're going to have to go there. One of the things you kind of went to is it is the cross border. And I tell people, to me, that's the most common, easiest example, because you have money transferring, let's say, from US dollars to, I'm going to go ahead, pesos, going to Mexico. It's one of the easiest for people to understand. Well, they're not equal to each other. And when it takes place, we understand that dollar values, peso values fluctuate. So the stable coin gets used in between to just make sure that you have a stable, that this is what it is worth at this time as it moves from one country to another. Now that's the one use case I see the most of. I'm like, I get this one. What are the other use cases to where, especially something like the Genius Act passes, that we're going to see much more maybe adoption and use of? Where would it be?
So the number one we were just mentioning is the outbound remittance, right? Because stable coins don't sleep, not unlike your bank. You can transact 365 days a year, anytime. It's fast, it's safe, and in most cases, the fees are very, very reasonable, very low, much lower than they would be if you were trying to do the same sort of thing as a wire transfer, for example. I use Chase Bank, and I believe they're charging me $40 per wire, right? And that's as long as I don't make a mistake on all the information I need to have, right? I have to have the account, I have to have the other person's account information, address of their bank, routing numbers, SWIFT code, whatever it is, right? All that stuff. And you make one mistake, it doesn't go through, and most of the time, I think you still get charged. Um, so you can imagine where some of these advantages could be for stablecoins. I'll put a little asterisk here as well. And it's something that's very near and dear to my heart is the financial inclusion opportunities that stablecoin provides. And I talk about this at payment conferences. It's not always the sort of the sexy topic, but it's important. In the US, I think 20% of households are either unbanked or underbanked, right? I think it's 5% are unbanked completely, and 15% are underbanked. And that comes from the FDIC. I think in the 2023 report. So there's a large part of the population that does not have access to bank, financial instruments or financial transactions. So what they end up doing is they use other types of predatory financial institutions, and I won't name names, for now, but I think most people are probably familiar.
Easy examples, the check cashing places that take a major a chunk, a percentage of their checks for them to be able to, get some of what should be theirs.
Exactly right. And these are the people who can least afford to be losing, sometimes up to 20%, 15, 20% in some cases. It's horrible. So stablecoin offers an opportunity to have access to financial transactions that would otherwise only be accessible by a bank. And so this leads into the next kind of use case for stablecoin. We call DeFi, right? Decentralized finance. So it really means being able to lend, trade, um, invest, earn yield, right? Generate yield on your stablecoin without having to use a bank. So, maybe a lot of people don't know this. Stablecoins on different exchanges can earn APY, sometimes 5-6%, competitive with your bank accounts, with your typical savings and checking accounts, which I think are hovering around 3 or 4%.
Well, and
So,
it goes, the old saying, it takes money to make money. The problem is cash in your pocket is not going to make you money. When
correct.
you have investments or a money in an investment sitting somewhere, CDs being a popular one, savings accounts. And this is where I'm with you on the financial inclusion people, is educating them on this, that, hey, if you can let your money sit somewhere, what you do have can become more.
100%, exactly right. And one of the things that we, and not to take this in a completely different direction, but one of the things to think about is not just how people earn their money. What are their options as far as storing it and spending it and using it. But on the financial inclusion side, it's the people who have the least amount of access are the ones who are the most, well, I don't want to say desperate, but I would say they really need that sort of financial
They're in a
education.
hardship.
Right, exactly. And we're not familiar. We're not thinking. I think banks aren't thinking about how they, save and use their money. One very common example is what's very common is the pooling of resources. Right, there are certain communities where families, entire families, husbands and wives and uncles and aunts and you know of age children who can work. They take all their earnings and they pool them so that they can earn better yields or that they can do other things. I mean, not if they're not banked, then they're not earning yields in the traditional sense. But they'll rotate and they'll take turns how they use that fund. Maybe one month mom will use it for something she needs to have to do, and then the next month it'll be her sister who will use it.
Yeah, like
Everybody is pooling
it's
their funds.
the nephew who's graduating from high school, they down payment on a vehicle so he can start working. Things like
Exactly.
that. Yeah.
Exactly. And so the point I'm trying to raise is we're not even thinking about how they, pool their ass. How are they saving? It's just not something that we talk about very often. So, there's a lot of interesting opportunities that stablecoin unlocks. Now, not to get off track. Let me bring it back, and I don't want to go down the DeFi route too much, unless you want me to. But
Well, no, because I got to tell you, one of the questions that I got to ask too
yeah,
is that I get from a lot of followers is this is just the government doing things so they can track me. And my response, I'd love to hear yours, but my response to them is there's no more tracking in this than there is in anything else digital. And the reality is they can track cash even to a certain extent. That's just a fact. It may not be as well, but they still can do it if needed. And also, always end with, and if the government's really trying to track you, they're going to just deal with it.
right.
I'm sorry. I mean, they've got that type of stuff. And what are you doing for them to track you? I mean, just saying.
To the people who ask that question, I would ask them. I said, or you know, it does, maybe it feels uncomfortable to think about the government tracking you unless you're the one who gets scammed, right?
Mm-hmm.
Anybody who's fallen prey to a credit card scam where they're not being made whole, or worse yet, they're sending money, right, to somebody who misrepresents who they were or the use case or anything like that. And there are all these stories. There happens much more often than you think. Those people, believe me, those people wish it was tracked more than it currently is. So, and of course the banks, and this better than anybody, at these payment conferences we talk about risk, we talk about compliance, KYC, AML. We talk about this stuff for a reason, because it's prevalent and you want to make sure that you're doing your best to protect your consumers. It's a huge part of the stablecoin conversation nowadays, on the Genius Act and on the Fit 21. On both sides, consumer protection is a huge part of it. The good thing, and I'll mention, I was just on a panel in New Orleans. We were at the NACHA conference down there, and I was on a panel with the general counsel of TRM Labs. They are part of a endeavor called T3FCU. So the three T's stand for Tether, which is the token issuer; Tron, which is the blockchain, the underlying blockchain that the stablecoin is traded on; and then TRM Labs is the third T. They are a blockchain analytics company. Now, the three of them together, the FCU stands for Financial Crimes Unit. They are working with the DOJ, the FBI, various other organizations, what do you call them, state or various law enforcement agencies. That's what I was looking for. And to date, I think it's only been 6 months. They've frozen over 200 million in assets, 200 million US in equivalent assets of bad actors. And bad actors include states that we're not friendly with: North Korea, Iran, terrorist financing, drug financing, human trafficking, all these terrible things. They can identify based on certain metrics that they know what to look for. I mean, it has to be, I think, behavioral locations and things like that. They can identify, freeze, and in many cases reissue. They can burn those tokens and reissue to the original owner, trying to make the owner whole. The person who, in this case, was either defrauded or in other ways tricked. So there are a lot of use cases for tracking that are actually very positive for
So
the
I
market.
like that right away. I mean, because if your cash is stolen, it's gone. There's nothing any of these agencies can do for you. Not the banking industry, not the law industry itself. But if it's taken digitally, there are things that they can do. And on top of being able to protect the individual, is it can protect, well, the community, the country in many different ways, because of being able to find, which I would believe, the human trafficking, the drug trafficking, the weapons of mass destruction type stuff. Nobody really listening would want that happening.
Exactly right. And I would also tell your listeners that, if they're worried about it, well, if you're using Venmo, if you're using Zelle, if you're using PayPal, those track, right? I think most people realize you have to go to your list of transactions. You can't delete them. They're there. So they're there for a purpose, and this is no different, in other words. And I think rather than look at it as an opportunity for the government to overstep its authority, I think of it more on the other side. This is an opportunity for the government to improve consumer protection. And it's not the government. And by the way, I'm using the wrong term. It's not the government necessarily. It's the token issuers that have this ability, right? It is the token issuers making sure that, working with law enforcement, that they have the authority to go ahead and do these things.
Well,
So,
can we wrap it back around to the Genius Act? Because
yep.
one of the things I know of with the Genius Act is it is putting more controls and parameters within who has that ability for being able to issue the stable coins, and giving more accountability for that, and even what we would call oversight, which is always important. Oversight is really making sure that there's people that are checking to make sure people are doing things right. That's the basic, most simple definition I can give of it. So isn't that true that that's one of the biggest pieces of the Genius Act, besides consumer protection, saying this is what it's going to be, but also making sure that there's some rules in place so that people play right?
Yes, 100%. And there's good news here. In fact, this was one of the things that I was working on for the senator who will still remain nameless, but he had major concern about foreign players, as noted and defined in the Genius Act. Now, for the listeners here, we're really just talking about Tether, right? Circle is the big one that was founded in the U.S. It's a U.S. based company. And then Tether is the larger one. We cited the metrics before, right? 11 billion versus 116 billion. Tether is the one that's an overseas company. Now, Tether, obviously, because it's so much larger, has a very strong argument for why it is a preferable stablecoin for people. Depending on, if your primary thing is overseas remittance, it makes sense to use Tether, because Tether is just more widely adopted abroad. So we want to make sure that we're not excluding those players. At the same time, we have to make it clear, if you're a foreign player and you're in the US, you have to play by the same rules as US players, and both players, domestic and international, everybody has to have the same rules and regulations that they abide by.
All right, Adrian, we're getting here to the end. I can't believe. Here's the thing. What For everybody that's out there, and a lot of the people that are listening to the Payments Professor are, sometimes they are C-level. Your community financial institutions. A lot of them are brand new to the industry, and then there are definitely. I picked up a lot of followers over the past few years that they're not even in the banking industry, but they're wanting to know more about what happens in the industry. So, what words of knowledge, wisdom, maybe even if you pulled out your crystal ball and looked in the future, would you say you need to go learn this about stablecoin? You need to be paying attention to this, and this is what I think is going to happen.
All right, so I'll do both. I'll tell you what I think is going to happen next, and let's call it the next year. And then I can offer some words of advice or wisdom for how I think your listeners can prepare. So what's going to happen next? Well, I think specifically we should be anticipating federal legislation by the end of this year, right? It's going to depend on some of the compromises that both sides have to make, but I think there's enough determination, and there's enough just desire on both sides to get this to happen. So I'm fairly optimistic that we're going to see that. Banking regulators are going to step in if Congress doesn't act. So I'm talking about your Feds, your OCCs, New York DFS. So I think no matter what, we're going to start to see that leading into more public and private collaborations. I was on a panel at the Cornell Blockchain Conference, and it was about winning the stablecoin race. And I think if you look at, it's very similar to electronic payments, and you'll be familiar with it. Very similar to ACH payments. Why were ACH payments a thing? They started because they solved the problem, right? Check cashing on payday was becoming too onerous for banks back in the day, so ACH payments were developed. After that, regulation had to catch up. After that, you saw private and public collaboration. Nacha was formed, for example. And then after that, you see more use cases, more adoption, and then innovation. So if there's 5 steps, right? I think for stablecoin, we're between steps 2 and 3 right now. Stablecoins were designed to solve a problem. And we talked about that at the beginning of this. The next thing is regulatory catch-up. And then after that, public and private collaboration. On that, I'll put a little plug in. I've created, or DSA has formed something called the Stablecoin Forum. And it's the seedling of what Nacha is to ACH payments. My hope is that Stablecoin Forum will eventually be that for stablecoin.
Where can
Because
people go find more to learn about
yes.
that, or just to get in touch with you?
So our website, www.dsaf.org, Digital Sovereignty Alliance, F for Foundation, so dsaf.org. At the top, one of the links will be Stablecoin Forum. And there, it's just a landing page with some member application information. But soon it's going to have regulatory updates. It's going to have educational kind of modules and resources. There's going to be a lot there. And it's going to be a member-driven, just like Nacha, member-driven, member-led, and it's going to be the bridge between the government and the public sector, right? Public and private collaboration. So we're going to do the same things that we need to think about risk. We need to think about compliance. We need to set those ground rules and make sure that the players are playing by the rules, right? Just like Nacha. I can't say enough positive about the people behind that organization, because I
They're
think
awesome.
what they do is incredible, right? And I've taken a lot of inspiration from it, and I believe we have their support at this point, what we're trying to do. And I think there's a future where we can really work together and learn a lot from each other. So
I know it from my years of being involved with them. They are far more than ACH. People thinking that it's only ACH, they are electronic payments and everything they do. And I got to tell you, Adrian, we're going to leave it here on a cliffhanger, because there's still a lot I could ask you. Still a lot to go. We're going to be paying attention to this. I got a feeling we'll have you back on the payments podium before too long, because I can already see the flood of questions coming in from this. But for those of you out there listening, if you got a topic that you want to have addressed, or if there's a speaker you think needs to be on the payments podium, as always, get in touch with me, Kevin at paymentsprofessor.com. I will do my best to make sure that we get that topic or we get that speaker, and we're giving you the education that you need. But for now, this is the part where I say, class dismissed.
There's a world out there, it's a digital maze where dollars move in mysterious ways. Complex systems, rules, and regulations. The payments professor sparks revelations. No need